And welcome to another video of Just Being Earnest. In today's video, we're going to be talking about the Singapore Savings Bond and what are the things that you need to take note of before you put a single cent into it. So, what exactly is the Singapore Savings Bond? The Singapore Savings Bond is actually a special type of the Singapore government securities with features that makes them suitable for individual investors, and it is fully backed by the Singapore government. What returns do you get for investing into the Singapore Savings Bond? So for the current bond that they just released in July, you'll be getting an average return over 10 years of 3%. So if you look at the table below, which shows you the year from issue date of 1 to 10, you can see it's starting off at 2% initially and ends the year at the 10 year at 3.29%. So if you average out this interest over the years, if you hold it from the day one to the day that it matures, the total payout that you'll be getting is an average of 3%. What are the frequencies of the payouts? For the Singapore savings bonds, the payout will be paid out every 6 months, and this payout will be automatically paid into your bank account or into your SRS account. And for example, let's say you invested in January, you'll be getting the payout in July and the other payout in uh, December. So it's every 6 months. What are the risks involved? So this is considered to be quite safe as it is fully backed by the Singapore government. So you can always get back your investment amount with no capital loss. How long is the bond? So the bond itself, I mean, it's 10 years, but then you are also allowed to redeem it anytime in between. So let's say you invested it in this month, and then subsequently you decided that you needed your cash for some other purpose next month, you can choose to withdraw it and then you can get back your principal amount plus the prorated interest. So how and what can I use to buy this Singapore savings bond? If you are using cash, you can use it via iBanking or ATM for DBS, OCBC, and UOB. And then if you're using your SRS money, then you can do it within the iBanking website as well. So how do you redeem your Singapore savings bonds if you're not going to hold it to maturity? So if you're holding it to maturity, then there's nothing much you need to do because the amount will be automatically transferred back to your bank account or to your SRS account. They will no need to have to do anything. You'll be automatically returned to you. But if you're going to redeem it early, you're not going to hold it to maturity, then you will need to submit your request before the closing date. If let's say you are using your cash investment, then you do it through your iBanking, or if you are doing it through your SRS money, then you need to do it your SRS operator or through the iBanking as well. What are the minimum and maximum amount that you can invest in, and what are the multiples of it? So for the investment amount for this Singapore savings bonds, the minimum is $500 and is in subsequent tranches of $500. And the maximum amount that one can invest into Singapore savings bond is to a limit of 200,000. So what are the penalties for early redemption? So there are no penalty for exiting the Singapore savings bonds investment early. And for both the maturity and redemption, you'll receive the principal amount by the second business day of the following month. And then you'll also be given the accrued interest as well. So for me, I have taken a look at it, and based on what I look at the details so far, I'll be actually doing a dollar cost average strategy. So what this means, let's say I have $50,000. I do not know what is the highest rates that may appear every month. Instead of putting 50K one shot into one Singapore savings bond tranche, what I will do is I'll split it up into five different tranches of $10,000 each. So every month, I will look at the bond details and then I'll put in 10K. Then the following month, when the next tranche come out, I put in another 10K. And then the following month, the other tranche come out, then I put another 10K. Because you may never know that, let's say if you put 50K into this month, then the following month may be giving out a much higher interest rates. Then you may be losing out on the higher interest rates. So by doing a dollar cost average strategy for Singapore savings bonds, at least it will allow you to maybe get the higher average interest rates. So one quote that I'll leave you all here is that some may regret building a shelter when it was sunny, but no one ever regretted building a shelter when it rained. So hopefully through this video you learn something new today about the Singapore savings bond. And as always, do remember to make smarter financial decisions every day. Have a great day always, and bye bye.